Hello everyone, good morning. It's your favorite coach Larry FX Academy once again, and today we are going to be discussing about the Volatility 10 index. For a while I've not actually uploaded any video on Volatility 10 index because the market has not really been moving in a particular direction, and that basically was the reason I didn't get to do that. So now on this particular episode, what I want to discuss with you guys is understanding what the market is currently about doing. Now from this period we saw a break in trend line, and this break in trend line helped us to understand that market was going to be rallying to the we saw this push to the upside and it gave us a break in trend line here. That helped us to know that market was going to be dropping to the downside. Now, the trend line above it on the downtrend got broken to the upside. Now that gave us a change in character perspective. And now, the change in character actually extended towards this particular area. So it extended towards this particular area. You can see how price got into this level, respected it clearly, and it's tried to rally to the upside. So let's look at what happened here. We have our break of structure on the higher time frame. We have liquidity being taken here, and then we have price coming down to our 0.618 level and our zones to react. So we can see markets reacting in this way. So you can see it came into respecting 0.618 level, you understand? And currently it's pushing to the upside. So we are going to actually observe what is going on here. Two things. Market can still from this zone drop to the downside and continue invalidating this trend line break. But then moreover, market can also still continue from here into this point to complete the new trend reaction, thereby giving us breaks to the upside, retest, break, retest until maybe this level is being taken out or the next trend line is being broken. Now, next trend line, it's from this place to this one. So that tells us that if you are even entering at this area, putting your stop loss below this low or even with the Fibonacci here, you are very safe because you just simply have this open air. You have this open price here for your entries. Now we go to the 4 hours time frame to kind of see the market a little bit clearer, and then we see our break of structure here, we see our liquidity grab here, we see price rally from the price point A to price point B, then price drops into the 0.618 level, and you can see market is pushing to the upside. So ideally on this one, we simply are looking at this place for the first take profit, and we were able to see a kind of break of trend line at this point. Yeah, so we have a break of trend line again at this point, which price broke, came back to retest, and it's now above it. So that being the case, we have been able to understand what is going on around this place. So let me just make it white so we are able to see that price point, knowing that that is what we are looking out for. So I delete this. This is the overall stop loss for the main entry. So this is what we have. Yeah, and we can now go to the smaller time frame. Sorry about that, guys. So what we can see that market is doing at this point is very clear. Now we have this price point, which is the break of structure that market has given to us, and then we have the smaller levels, which we can consider this as the first one. We can consider this as a major smaller break of structure. Then what we can clearly see happening here will be much more clear on the 15 minutes time frame. So on the 15 minutes time frame, what can you easily see? On the 15 minutes time frame, you have a break of structure at this point, liquidity here, and break of structure. So we can now say we have a smaller break of structure here, and we have a smaller liquidity at this price point. So the simple thing we are going to be doing is marking from our point A to point B, which is marking price from this area to this area. So that being the case, we can see that price has actually come into expecting the 0.618 level. The only thing now we can do is position our tool, which means we're supposed to go for a long, and take profit will be here, stop loss will be here, and then you use good risk management. Then that is it for the volatility. Then I think this is a helpful information. All you are going to be doing is you'll be looking for buy reactions to this zone as the final take profit. Now, the only time we are going to be looking at selling this market, I've showed you, we've drawn our trend line below, so markets could give its reaction here and still push into that high. So for today, this is the trade we are looking out for. You can enter now, and it only means that you're going to be increasing your stop loss, and that's if you're entering at this price point, you're only going to be increasing your stop loss, because this is the overall place we're looking at stop loss. This is the final place for take profit. So do make good use of this information and take disciplined and informed entries on your trades. Do have a wonderful day, guys. Peace, one love.